Hello, and welcome to Savills' latest analysis on the impact coronavirus is having on the UK housing market. As you can probably imagine, this is an unprecedented situation, and we're doing the best we can to stay on top of it. The scenarios we set out here are based on the latest economic forecasts and data. As the circumstances change, we will update our view. Looking back over the last few decades, we see that whenever there's been an economic downturn, that's coincided with a downturn in the housing market. That's true whether we're looking at the 1970s, when high inflation meant that house prices fell in real terms, or as recently as the global financial crisis. Most economic forecasters are predicting that the pandemic response will cause a short-term dip in economic output in the UK, followed by a V-shaped bounce. The question then is what kind of V we're looking at over the coming months. Here are the latest forecasts from Oxford Economics. They're predicting that GDP will fall by 2.5% in real terms in Q2, but will bounce back by 1.8% in Q4 of 2020. They're also predicting that unemployment will spike briefly through 2020, but will return to long-term low levels by the middle of 2021. The Bank of England base rate will remain at 0.1% for the next year and a half, but will start growing again from 2021 and will hit 1.5% by the end of 2024. With all that in mind, what does this mean for the UK housing market? We expect that prices in the mainstream market could fall by between 5 and 10% in the near term, albeit off a very low number of transactions. Prices are likely to bounce back as confidence returns to the market, both from home buyers but also from businesses. We're standing by our forecasts of 15% growth by 2024, but we recognise that the shape of that growth year to year will look very different to how we first forecast in November 2019. We're expecting that transaction activity will drop off significantly over the coming months, particularly with government advice being that movers should avoid moving home wherever possible while emergency measures are in place. However, while these measures are in place, demand for new housing is still growing, and we do expect to see that pent-up demand building for when those emergency measures are lifted and people can move again. On that basis, we're expecting transactions will return to their 5-year average by the middle of 2021. What about the markets of prime central London? PCL already looks like good value in a historical and global context. Values are 40% below where they were in 2014 if buying in US dollar terms. However, falls in global equity markets mean that high net worth individuals will have less wealth available to spend on housing, at least in the short term. If prices do fall further in PCL, it will represent an attractive buying opportunity for those investors looking to hold for the medium to longer term.